Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Lots to discuss as always, folks. We've got stuff that's whipping left and right. Did you guys see the stock market yesterday afternoon? The crazy wild swings there, the moves in gold, the metals, as well as the crypto markets. So let's get right into it. Let's get things going. All right. Let's see what we have in store for us. Number one, right to the website. Don't forget, guys, I wanted to show you this real quick, is that if you scroll down on the website, now remember, all the information we already give you guys, and now we have even more. We have an education section. And again, this is for people that want to be educated, which, to be honest, is the most important thing. New articles on various things like the largest gold and rare earths countries out there, what is staking, what's the difference between the Dow and the S&P, the positives of dividend investing. All of these things right here, guys, are in here. And again, just as always, you can scroll sideways and there's even more educational content. I love this one, by the way, when and why the gold standard failed. That's a good one as well if you're into stuff like this, like me. So this is all free on the homepage, guys. Homepage is filled with information, and it's only going to be added to. I want this to be the resource that everyone in the world comes to here at Verified Investing. All right. What we're going to do next is we're going to get into some chart action here. I want to start really on the U.S. dollar. And again, the dollar here today, and we're going to look and talk a little bit about the Fed yesterday. But yesterday we did see a big drop in the U.S. dollar, but it's still holding pretty much stationary where it has been. And again, there are a few reasons for this. So number one, it was starting to push up the previous day, and then the Fed kind of smoked that to the downside and brought it in. But what we have to remember is that the U.S. dollar, yes, there's inflation, right? And the normal thought process is, oh, there's inflation, therefore the dollar should be going down. That's not how the dollar works. The dollar is basically a currency that's pushed against other currencies, or it's compared to other currencies, the yen, the euro, etc., all these other currencies. And so it really has no difference on what the inflation rate is in the US. It's all about how is it faring against these other currencies. Is it going up against these currencies? Is it going down against these currencies? So just remember that. That's a very important factor. Okay, so bottom line we still have on this, I would still consider this to be generally bullish, that I would still think there's a chance we can go up to this 107 target on the Dixie. Now again, just going back to yesterday. Yesterday we saw these wild swings in the S&P 500. I want to bring this up right now. So Jerome Powell basically began to speak. The markets ripped up. When he was done, they ripped back down. Overnight, and this is the futures data, this is essentially pre-market data, we slowly have been floating back up. Now, the key is this. The mainstream media began to spin this. They spun this like a beautiful, pretty picture. They said, oh, the Fed did announce that they're going to slow their runoff of assets on their balance sheet. Again, remember what the Fed has been doing. Not only have they been raising interest rates, well, they haven't lately, but they were raising interest rates, but they were also selling massive amounts of their assets that they had accumulated on their balance sheet. And when you sell an asset, when the Fed sells assets, it ultimately works as a tightening mechanism for the markets. So the fact that they're slowing that from 60 billion to about 25 billion a month, that to me, yes, it is a slight way of easing. It's kind of like the precursor to rate cuts, but it's not significant. But the markets, at least the mainstream media, is really making it out like, oh my goodness, this is the start. This is it. The Fed is again starting to loosen monetary policy, and that again is bringing us back up pre-market. Now again, just to give you a rundown, that's basically what's going on here from yesterday's Fed all the way through the overnight. The other thing to note, we did have jobless claims this morning. Jobless claims, again, amazing numbers. And these, by the way, jobless claims, for those of you that don't know, people that are filing for unemployment, 208,000. Historically, that is a very low number. We've been staying below 225,000 for a long time. That's my pivot point on the chart. We get above 225,000, I think there's something that's coming, and there's something that is in the works, essentially, in terms of unemployment rising. As long as we're below 225,000 per week in unemployment claims, it's fine. Everything is fine. Okay, so, and by the way, when I say everything is fine, everything is not fine. But at least to the markets, the labor market, everything will be fine for now. Now we look at this chart, guys. This is the chart of the S&P 500. We know our long-term uptrend was broken. We collapsed. We did a retrace to the scene of the crime right here, and we got rejected. Now, again, for me, the things that I'm watching here going into the next day or two or even early next week is basically just following along. Does this level hold, and do we take out this low? If we take out this low right here, then likely you're going to see that next wave of big selling that will take us significantly lower. If we take out here and we go up here, essentially the only thing that would change is that you now start to look at having a wedge pattern, right? So if we look at this, and I'm going to put a wedge pattern really quickly on my chart, just in case this happens. And by the way, this is gaming the markets. This is what you need to do, is you need to game the markets to figure out what the different possibilities are. And then you ultimately choose the one that has the highest probability, and that's the way you trade if you so choose. But you can see right here what I did was I basically connected this low to this low, and we're going to open somewhere right around here today, right? But then you can connect these highs. And so if we do, let's say we do start to trend up, your resistance line is going to be right in this range, and you're starting to create this channel, and then eventually you come back here, and my guess is either way you're going to go lower. I don't see a path outside of going lower because, again, with inflation high, the Fed is handcuffed. Yeah, they can do a few things like a little less runoff on the balance sheet, maybe 1 or 2 rate cuts, but they're not going to be able to save things when things start turning south because inflation remains high. Now, inflation, by the way, oil is starting to break down, gasoline is starting to break down. That will help, but that also sends a signal. When you see oil starting to collapse, and I'm going to talk about this in just a little bit, and gasoline, that's a direct indicator of what is expected in the economy. So now all of a sudden we're seeing a shift to more of a recession expected via the commodities investors. Granted, the talking heads aren't talking about this yet. Everything's going to be fine according to them, but this is something we have to pay attention to. All right. Now, I do want to get into some earnings here today. We did have Qualcomm yesterday after the bell. I was really watching this trend line, and I'm going to watch this trend line today because price did break below it and then created a bear flag. Right now, we are trading above it, but we also have this double, triple top up here. So on Qualcomm, if we go to our 10-minute chart, which shows us our pre-market data, right now you can see we are trading at 173.80. So this was initially where we closed, big pop, sideways chop, and a little bit of a float up. The levels that I'm watching for, so there's 2. So day tradable, the high risk, but day tradable would be that double top on the chart. If we flip back to the daily, the double top is the yellow line, or triple top technically. So this is going to be a little resistance right up here, right? And that's around 176.5, give or take. So that'll be your only real resistance that I'm seeing here. And then on a daily closing basis, what I'm watching on Qualcomm on a daily closing basis is, do we close above this line, this orange line, or below it? Below it would be very, very bearish. Above it would be neutral to positive. Not fully bullish, because it would have to confirm back above that line to really become bullish again. But it is something that we'll be watching today in the Qualcomm action. Now, that was one stock. Most stocks are getting crushed today, guys. Take a look at DoorDash. DoorDash collapsed on earnings yesterday after hours, going from basically a closing value of about, I don't know, it looks like it closed around 130, dropping as low as 106. It has bounced about $10. But the thing here is, we had Etsy earnings, not good. DoorDash earnings, not good. Etsy is a consumer stock, right? So that, again, is not a good signal for consumers if Etsy's struggling. DoorDash, people are ordering food, or lack thereof. In this case, lack thereof. That's also consumers potentially pulling back a little bit. So if you look at some of these earnings, you start to see a pattern developing. So many stocks this earnings season have come out with good earnings, but then they've warned. They've lowered guidance for the next quarter. And again, you look at some of these stocks like Starbucks, and I talked about Starbucks yesterday. A lot of these stocks are starting to run into consumers that are not quite spending as much as they were prior. And that, again, is a precursor to a recession potentially. So anyways, going to DoorDash, where are our levels on DoorDash here? If we bring up the chart, So again, number one, DoorDash was rallying quite a bit, right? Look at this uptrend and then same sort of thing. In fact, you could even draw a trend line right through these lows, right? So you had broken a little bit of a bearish pattern. We're now trading around 116 right here, but we were as low as 106. Where are the levels that I'm going to look for? And honestly, I don't have much on this chart unless we go down. See this flat top right here? And I'm going to put a trend line in right here so we can do this with you guys. But basically, this would be a significant level for me if we got there today. Probably more as a day trade, frankly, but nonetheless a level. So pivot point here, right through here, and it's basically just below 104, right? Just below 104. So 104 would get me interested. We then have additional levels at a gap fill right here and a pivot low right in there, and that would be just below the even number of 100. All right, more trading options for today or potential analysis. Take a look at Etsy, guys. Whew. This is a tough one. So Etsy, again, yesterday closing basically around $70, trading at $58.76. That's a huge percentage drop, about 15%, I believe. If we go to the daily chart, there is one level that I'm watching. Okay, so the level here, so look at this little wedge pattern development. See this wedge pattern? I had to kind of zoom out because we have to go back here. Maybe I can zoom in just a little bit so we see it a little bit more clearly. But basically what I'm doing here is we're looking right here. We take this low here and we connect it to this low right over here, and we get a level around $55. So there should be some technical support around $55 on Etsy for a potential bounce today. But again, the stock is getting slammed. There's no doubt about it. But 55 stands out to me as a potential technical support level. Now, on a positive note, Carvana. All right, don't ask me why this stock is doing so well. Well, obviously their earnings were pretty solid, but what a move on Carvana, guys. Huge move up. They beat earnings. They basically came out and surprised everyone. In addition, this is one of the most highly shorted stocks, so there's a lot of short covering pushing this up. But right now, Carvana at just under $120. Again, because it's a highly shorted name, it could squeeze, so be very careful on this. But basically, suffice it to say, I don't really have a level. There's a little bit of a level here, and again, it's hard to see. Let me see if I can zoom in for you guys. All right, there we go. So it looks like right around 133 to 130, 133. There's a little pivot here, right through here, and that line goes right up to about 132 to 133. That would be first resistance. I probably won't trade this today. It's not a big enough company for me to trade. I try to stay 50 billion or greater in terms of market caps, but I do like to give you guys the levels just in case we can watch it. Now, another horrendous earnings report here from Fastly. Now, Fastly, again, is not a big company, but it is getting crushed today. Take a look at this. You can see I have a trend line in here already. And one of the things to look at here, guys, look at this move down. Holy cow. So this stock closed basically at $13. It's trading at $8. That's a massive decline percentage-wise. Now, again, looking at the chart, where do we get our first technical support? And if we go back to the daily chart, and we have to zoom out on this, there's a double bottom around $7.30. Now, we're near $8. That's not outlandish to think we could go down to about $7.30. So just keep it on your radar here that could be a level. But again, smaller company, getting crushed. The smaller the company, the less predictable the chart is. That's just the nature of the beast because it can whip it. Basically, when you have a small company and they screw up on earnings, people start to wonder, can the company survive? Can this? It moves much more versus like if Apple misses earnings today, yeah, it'll have like a 3-5% move, maybe 6% move, but Apple's Apple. It's not going anywhere. So you don't get the kind of crazy volatility that you do on these smaller names out there. Okay. On that note, guys, I do want to quickly do our drawing. Yesterday, again, was absolutely amazing. We had the 1-minute scalpel, Dr. B's amazing course was landed on the wheel. So we're going to do a quick drawing to see who wins this course today. And again, this course, by the way, it's meant for day trading, the 1-minute chart, but it's literally the stuff he teaches in there. It's applicable to all time frames. It's really remarkable. Amazing course. All right, Pura Vida Select right there. You got it. You got it right there. Well done. Congratulations. And again, Pura Vida Select is the winner today. So reach out to Lawton at verifiedinvesting.com. All right. On that note, guys, what I want to do now is we're going to flip over to the wheel and we're going to do a spinny spin spin and see what we come up with, which will be the prize for tomorrow. Oh, NordVPN, guys. 1 year of NordVPN. That is what will be given away tomorrow. Very cool there. I know a lot of us, if you're in crypto, love the NordVPN. So again, and listen, even if you're not in crypto, it's great to have the VPN access there as well. So 1 free year of NordVPN. I thank NordVPN for donating that to us for this board of, or this wheel of appreciation. Same thing, guys. Share this stream. That's what I want you guys to do. It's working. We're starting to get more views. I thank you from the bottom of my heart for this. If you're finding this useful, share it with your friends, your family, your Twitter followers, your Facebook followers, your YouTube followers, anywhere you can share it, and then post below, and so we can just confirm it got shared, and you are entered to win everything on this wheel. All right, guys, we're not even going to take a commercial break today. We're going right into the charts. Let's go right into it. What do I have up here? I have gold. All right, so gold, we have action. Yesterday, we got a bounce on gold, but one of the things that I talked about to my members at Smart Money Stocks and ETFs and Smart Money Commodities, don't forget, I have a commodity service as well that's crushing it. We just started it, already multiple winners. But one of the things to watch here is that you still have the dominant factors that are negative. What do I mean by that? Here's your topping tail. Okay, here's your bear flag. Yes, you got a bounce yesterday, but to negate the bear flag, you would have to close above this candle right here. Therefore, the bounce yesterday was a whippy bounce on the Fed. Today, what's happening? We're going right back down. Very cool right there. So what do I expect? I'm still looking for a $2,200 target price on gold to the downside. That basically brings us right back into this shelf. So again, look at it like a shelf, right? If you were to drop a ball onto a shelf, this is where the ball would stop. It would bounce here, right? So that's the idea behind it. Now, do I think that gold could even go lower? Yes. But for me at least, and I'm just speaking for myself, is that I want to start picking up gold again on a swing basis. And my first level will be to start accumulating it here, and then we'll look at further levels to the downside, and I'll just accumulate as it goes lower. But nice to see. I'm actually, weirdly enough, as much, I have lots of gold on a longer term basis holdings, but I'm still rooting for it to come back in more because I want to accumulate on a swing basis the gold chart. All right, I want to quickly go to silver, and then we'll go to Bitcoin. Guys, don't forget, I know usually I do Bitcoin, but we're just switching it up a little bit today. What have I said to you guys about where I expected silver to go? When silver was up here, what did I say to you guys? I mean, we were at 29, we hit 30 basically. And I said to you guys, look for a pullback to 26 to 25.50. Well, guess what? We're at 26.03 right now. So we get down here a little bit more, and again, I'm going to start to look to accumulate. This is my zone. Now, let me ask you guys a quiz question. Gareth says this is the zone. Does that mean he's going to be 100% right? No, right? This is just a way to find the technicals, which push the probabilities in my favor. So, yeah, I mean, I'll probably be buying somewhere in here. I don't know where yet, but somewhere between 26 to 25.50, I'll probably start accumulating. I do it the smart way. The smart way for me is the way where I've learned in the past by getting burned so many freaking times in my early career of like, I'd be like, oh, I'm going all in at 26. And then it goes down here. And I'm like, oh, crap. Now when it bounces from 24 to 26, I'm only back to break even. I'm like, well, that sucks, you know? So again, these are things that I've learned the hard way. I pass my knowledge on to you guys in hopes that maybe you guys avoid a few of my early mistakes that cost me so much money. But basically what I'll do is I'll just buy a little bit in here, a little bit in here, maybe a little here. If it keeps going lower, I'll just accumulate. This is a huge level down here. That's the one I would want it to hold. As long as it holds that, we're good. It's a longer term upsloping trend line. Okay. Onto Bitcoin real quick here as we go through. So Bitcoin is getting a small bounce today, but look at what we have here. So number one, we confirmed below this line here. This was this longer trend line. So that is a negative. Now, the positive is, if you're a bull, is that you closed below this channel, but you haven't confirmed yet below that either. So you're right underneath. It's trying to get back above. It is trying so hard. It's already tagged the line. And again, it hasn't gotten there yet, but it's trying. You want to see, if you're a bull, you need to see it recapture basically 59,000. Gets back above 59 and holds there, then maybe it can at least retrace to this level. But the problem is that's now a confirmed resistance line. So it's tricky. This is a trickier chart for Bitcoin. Bitcoin, again, doesn't mean it can't rally up, but it's just becoming a harder chart because there's more roadblocks being put up, right? I mean, you have a roadblock. Well, first of all, there's a mini roadblock here. Then there's a big, heavy one here. Then you have this high here. Then you have the downsloping trend line here, this high and this high. More and more roadblocks are being put up, which makes it harder. It's going to take more and more buy pressure, buying volume to come in. And again, we're seeing the ETFs starting to stall out on their inflows a little bit as well, which isn't helping the case. Now, I've been pretty steadfast to you guys that I said this a while ago, even when we were at 74,000, people were making fun of me left and right. And I said, guys, I honestly think this is coming back into the 50s, maybe as low as this here, this level right down here, right? Right here, and maybe as low as here. It's just, again, the level's basically 52 to 53 down to 49. Again, we got to 50, close to 55. We'll see if we get there. But that's where I start to get interested myself at accumulating some Bitcoin, as I would expect a technical bounce there. Ethereum, we covered our short yesterday. So far, that was a great cover, guys. And I explained to you that it's a risk-reward assessment. Doesn't mean Ethereum can't go lower. It's just, as a swing trader, I had to acknowledge the chart was into two crossing support lines. And sure enough, we've bounced about $200+ since I got out of that. So that's a nice little exit for our members at Smart Money Crypto. Now, again, you can easily, so you're holding support, here's resistance. So you could go up here, but you could also go here. The key is, do you break and confirm? That would be a big drop. Or you can come up here and break and confirm, and then you get the big pop. But essentially, we're still stuck in this kind of major support range on this chart here of Ethereum. Oil, guys, holy cow. Look at this. This is the intraday 10-minute on oil. It's going lower. Yesterday, there was a head and shoulders that broke. It triggered. We knew that we had major technical confirmed breakout, and now that has failed. Everything to me is looking bearish on oil now, guys. This is not good on oil. I'm going to flip over to the daily chart, and whoa. Good. There we go. All right, so here we have it. So look at this. Here you have it, right? So look at this drop. And this was kind of like, so look at the pattern. You guys know your head and shoulder patterns? That's a head and shoulders. There's no doubt about it. And the line was right at the confirmed support. So once you broke it, this is good night. Listen, and you will bounce. Don't get me wrong. You'll bounce. We will get bounces here on oil. But if you do a measurement for the calculation from the high of the head to the line, you get a $74 target. So at this point, I'm in the camp that we're going to 74. And by the way, the Fed is loving this. They're loving this because this, coupled with UGA, which is an ETF for gasoline. Let me see if I can actually bring up the spot. Yeah, the Pepperstone. There we go. So I can actually do this. Look at the rollover on gasoline. Now, it's still significantly higher, but this is how you get inflation down. You got to get oil down, and you got to get gasoline down. You got to get the ones that are affecting Americans the most. That's how you're going to get it down. And by the way, that's also how you win elections. Just making a point. In any case, see how that comes down here. We'll see how much more it comes down. But by the way, I've done trades like that. Doesn't matter who's in the White House, but I've done trades in my history where I've shorted oil a few months before the election, and it almost always works. Almost always works. All right, last chart here real quick, guys. Quickly onto natural gas. Natural gas getting a little bit of a bounce here. Let me zoom in a little bit so we can get a clearer picture on this. But basically, nat gas, and I think this must be the weekly chart. There we go. Yep, nat gas is getting a small little bounce here, guys. It's still in the range. I still have an upside target of 220 to 225. Taking a lot longer than I thought, frankly. Natural gas is usually a very volatile commodity. Not very volatile in terms of its up moves, at least lately. So I'm still looking at that, so we'll watch and see. But as of now, guys, I think that'll end it for today. I've got to get back to the trading room, the Apex Live trading room, where we just continue to crush it for members in there with day trading levels that we're calling out live over our microphones to you guys. You guys view our live charts. You ask us questions. It's pretty darn awesome. All right. Thank you so much for tuning in. Don't forget to share this stream. We appreciate you from the bottom of our hearts, guys. I'm here. I'm going to do my best to always give you everything I know. Everything up here goes right through to you guys. That's how, again, I feel better about myself and what I'm doing for this world, and I hope it's helping you. Have a good one. Take care.